everyone, this is Dr. Barry, and today we're going to talk about personal auto insurance. Primarily, we're going to talk about the PAP, which is the personal auto policy, and it's the package policy for personal auto, similar to the homeowner's policy for the homeowner's exposure. And this is from Rada McNamara, the text, chapter 22. So let's start with a quick discussion of the PAP parts, and then the rest of this lecture will be looking more closely at each one of those parts. The PAP, while it is a package policy, is a little different from the homeowner's policy in that it's not split into two separate sections, one the property section and one the liability. It begins with Part A, which is liability, then Part B, medical payments coverage, then Part C, uninsured motorist, where Part A and B are kind of like Parts E and F of the homeowner's policy, and uninsured motorist is something completely different. Part D is physical damage to your auto, which is really the property coverage. And Part E is duties after an accident, which is really the conditions section of the PAP. And Part F is just the general provisions of the policy. So let's start with Part A, which is probably the most significant section of the personal auto policy, mainly because liability is what is usually required by states. When you think of auto insurance, most people first think of the fact that auto insurance is required by their state. Having a PAP will give you, as somebody who is a licensed driver and or an owner of a vehicle, what is sometimes referred to as full coverage. But be careful about the use of the term full coverage because there's no real consistent meaning of that term. Even if you have the minimum the state law requires, some people would refer to that as full coverage, but that's not having a PAP. And even if you have a PAP with all the different types of coverage that are offered by the PAP, you might still have a loss and not have sufficient limits to cover the loss. Carrying a PAP, a personal auto policy, will also meet the state's auto insurance requirements. And if you are driving in another state with higher liability limits required, or in some cases uninsured motorist, your PAP will automatically adjust upwards. And so that's a big advantage to having a personal auto policy. But let's review the definition of liability first. Liability pays for bodily injury or property damage of others and pays supplementary payments like defense cost or interest on a judgment. Almost all states require liability. Some states also require uninsured motorist, and some states require underinsured motorist. And we'll look at that later when we talk about uninsured motorist. But liability requirements usually are stated as split limits, such as in the state of Louisiana, where liability requirements are 15, 30, 25. And these are the only requirements for drivers in the state of Louisiana. To interpret those numbers, the 15 means that $15,000 of bodily injury liability per person is required, $30,000 of bodily injury liability per accident, and $25,000 of property damage liability per accident is required. Let's look at an interpretation of how those would work. So say, for example, that you are carrying the minimum required in Louisiana, 15, 30, 25, and you hit another vehicle, and it's deemed your fault. A and B, maybe Alice and Bill, are both injured in the accident. And keep in mind that Alice and Bill don't actually have to be in a different vehicle. They could be in your car, or they could even be pedestrians hit by your car. And say person A incurs $10,000 of bodily injury expenses, while person B incurs $20,000 of bodily injury expenses. And even though the total amount of loss from this is not in excess of the $30,000 per accident limit, the most the policy will pay is $15,000 per person. So while person A will get $10,000, person B will only receive $15,000 from the liability insurance coverage. That doesn't, by the way, mean that you would not be liable for the other $5,000. Insurance doesn't dictate liability. Example 2. Again, you carry the minimum required in Louisiana and are at fault for an auto accident where now 3 people are injured. Person A has a $10,000 loss. Person B has a $12,000 loss. And person C has a $15,000 loss. Assuming all of these are bodily injury losses and you are liable, since the total limit on the policy is $30,000, the most the policy will pay is $30,000. So while none of these have a loss in excess of the per person limit, together they do exceed the $30,000. How this is actually handled is a bit beyond the scope of this course, and you won't have to worry about it on the exam. But suffice it to say that it just depends on the state. It might be handled on a pro rata portion of each person's damage. It might be handled in chronological order. In other words, if person A and B use up the $22,000 and C comes along, there might actually only be $8,000 less to cover person C's medical bills. Again, it just is going to depend on the insurer and on the state. Note that Louisiana's requirements were actually raised from 10-20-10, which was some of the lowest requirements in the nation, to 15-30-25, just a few years back on January 1st, 2010. And I'll refer back to that later. But now let's take a look at all states' auto insurance compulsory requirements. Every state has its own set of financial responsibility laws. Let's take a look at the Insurance Information Institute's website, where there's a lot of great information on other things even in this course. And let's scroll down here. This article is not just about compulsory auto, but also about uninsured motorists. So we'll return to it when we talk about uninsured motorists. But there's a lot of really good information here. This first table, though, is where I want to look. And what I want you to look at is how Louisiana compares to other states. Notice that Florida is the lowest here with only 10-20-10. And by the way, that $10,000 right here is actually the PIP requirement. PIP, or Personal Injury Protection, stands for no-fault insurance. In the state of Florida and in some of these other states, you're required to carry no-fault insurance, which means that you're generally, and it depends on the state how this is interpreted, but generally it means that the first $10,000 of your medical bills, regardless of who is at fault, comes out of your own insurance. And generally you can't sue for legal liability from an auto accident until you get beyond the $10,000. But again, just look at each one of these and notice that the state of Louisiana isn't the lowest, but a lot of states are higher at 25. The other thing you'll see is that the states that do have 15 usually have a lower property damage limit, like here with Delaware in 10. In fact, Louisiana's property damage liability requirement is pretty high. In fact, there are no states that have a higher property damage liability limit, although a lot do have the $25,000. But we're on the low end in terms of the bodily injury liability limit. Let's go back to the Prezi. Also in that article, it says that New Hampshire is the only state that doesn't currently have a compulsory or mandatory insurance requirement, but they do have a financial responsibility law. Years ago, several states had only financial responsibility laws, but now most have compulsory requirements. The financial responsibility law basically says that if you're involved in an auto accident, even if it wasn't your fault, you have to provide evidence of the ability to pay for any judgment that might arise. And you can do so either through insurance or by posting a bond. And so, as I said, go back to that website and look at that table, noticing how the coverage requirements vary. Next, we're going to look at who is an insured under the liability section. And we've actually already looked at this before in the analysis of insurance contracts lecture. But it is the named insured and family member, any person using the named insured's covered auto, a person or organization legally responsible for the acts of a covered person while using the covered auto. And let me explain this a bit by giving an example. Let's say that you are employed by a law firm and you're running an errand for them, and while running the errand you have a car accident for which you incur legal liability. Because you were running the errand for this law office, they might actually be liable for your actions. But because of the way the policy is worded, they are actually an insured on your policy. Next, a person or organization that's legally responsible for the acts of the named insured, not a family member, while using any auto. So in this case, if you're driving someone else's car to deliver that item for the law firm, again, the law firm is an insured on your policy. But here's a key. Coverage follows the car. So what this means is that the coverage that is on the car, the vehicle that has the accident, is primary. So in other words, let's say that you loan your car to your friend, Amy, and Amy has an accident while she's driving your car. Because your car's coverage is primary, if Amy incurs $100,000 of liability from that accident, your liability insurance would be primary. So if you have $50,000 of liability coverage, your coverage would be exhausted, and then the injured party would need to turn to Amy's liability insurance. Make sure that you realize if you give permission to someone to drive your car, your liability insurance is primary. Next, let's turn to Part B, which is medical payments. And this is similar to the medical payments coverage under Coverage F of the homeowner's policy. We're going to talk about the insureds under the MedPay and a description of the coverages. But let's start with the insureds. First is the named insured and a family member. And an interesting thing here is that neither of these have to be in a vehicle in order to be able to collect under the medical payments coverage. So if you have medical payments and let's say your daughter is hit by a car as a pedestrian, your medical payments insurance would cover her medical bills. Additionally, other persons in the covered auto are covered under your medical payments coverage. First of all, the coverage limits are usually very low, $5,000 or $10,000. This is a pretty inexpensive type of coverage. I didn't mention before when we were talking about liability that liability tends to be one of the most, if not the most expensive of the different coverages, whereas medical payments is usually a small fraction of what your liability insurance costs, in part because the limits are so small. However, the limit is applied on a per person, not a per accident basis. So if 5 people in your covered auto are injured in one accident, conceivably if you have $10,000 of MedPay coverage, each one could get $10,000 or a total of $50,000. The coverage pays for medical, surgical, dental, x-rays, and funeral coverage in the event that an individual dies in the accident. The one key is that the claim must be 3 years from the date of accident to be collectible. Now let's look at uninsured or UM or underinsured UMI motorist coverage. Uninsured motorist pays compensatory bodily injury damages just like liability insurance if the insured on the PAP was not at fault. If we were to look back at the medical payments coverage, notice that it only covers medical, surgical, dental, x-ray, and funeral coverage. But the liability coverage covers lost wages and any other kinds of legally liable damages that might arise from the auto accident, such as disfigurement benefits. But the uninsured motorist or underinsured motorist steps in where the liability insurance would, and it pays all of the same benefits. The deal is that the person at fault has to have been one of the following. In the case of uninsured motorist only, they have to have been an uninsured driver. And you have to be able to show that it was this uninsured driver, a person who had no insurance, that was at fault. Underinsured motorist means that the driver did not have enough coverage. And if the policy pays for hit and run, you still have to prove that it was the hit and run driver's fault. But you obviously don't have to prove that they had no insurance. And some policies do pay for all three. The insureds under uninsured or underinsured motorists are the named insured and family members, any occupant of the covered auto, and survivors in the event that someone is killed in the accident. So it is very comprehensive coverage, covering everything that liability insurance would cover: medical, lost wages, etc. Now, some people do actually buy uninsured motorist property damage coverage, but this is not what is generally required. Louisiana has a somewhat unique law called No Pay, No Play. It was established in 1997, and part of the purpose of this law was to reduce the percentage of uninsured drivers. Let's look at it in the Insurance Information's website, that same place. Here, the Insurance Information Institute talks about no pay, no play. Basically, in response to public concerns that people who obey compulsory laws end up subsidizing those who do not, legislatures in more than 20 states proposed the no pay, no play law. Up until October 11, 2013, 11 states have enacted the laws. And notice here, Louisiana's law compels uninsured motorists to pay for the first $10,000 in out-of-pocket medical expenses and the first $10,000 in property damage before they can sue another party. That is only if they're uninsured. In 2009, interestingly, Mississippi had the highest rate of uninsured motorists at 28%, meaning that 28% of drivers in the state actually were uninsured. By 2012, Mississippi had improved a bit, being third at 22.9%. Oklahoma was first highest, and Florida was second highest in percentage of uninsured motorists. Louisiana now ranks 16th highest, with 13.9% of uninsured motorists in the state. Unfortunately, that percentage has gone up since 2007, when it was 12%. But Louisiana had the 13th highest rate of uninsured in 2007, so they've improved in the ranking. But I believe the reason that our uninsured motorist has actually risen a bit probably has to do mostly with the fact that we had a much needed increase in our liability insurance requirements in the state and the economy. Now let's talk about physical damage to your auto. This and liability, as I mentioned before, are the cost drivers to the premium that you pay for your PAP. Both of them can be extremely costly, and what drives the cost depends on different factors. Generally speaking, your auto and the cost of repairing and replacing your auto impacts the cost of physical damage to your auto, whereas your driving record and your age will tend to drive the cost of liability more. The coverages for physical damage to your auto include both collision and comprehensive. Collision coverage is when your car is parked and a rear fender is dented when you return, or your car runs into a telephone pole or tree, or of course any time that you collide with another vehicle. Comprehensive, or other than collision, includes losses caused by fire, theft, explosion, wind, hail, flood is covered, vandalism, bird or animal contact, and glass breakage. So realize that flood is covered, and if you have contact with a bird or animal, run into a deer for example, that's not considered collision, it's considered comprehensive. And the reason it's important to know whether damage is due to collision or comprehensive is because oftentimes the collision deductible is higher than the comprehensive deductible. Most people do this to reduce their premium. Since collision is a more frequent loss, it's a lot more expensive generally than comprehensive. So in order to reduce that premium, if necessary, you would increase the collision deductible and maybe leave the comprehensive deductible the same. Now let's just look at the last couple of parts of the PAP and some important definitions. First of all, Part E, which is duties after an accident. This is, as I said, the conditions section of the policy. Examples of the conditions are: you must promptly notify the insurer of how, when, and where the accident or loss happened, and you must promptly notify the police if your covered auto or any non-owned auto is stolen. Provisions is really another conditions section. If you go back to our discussion on analysis of insurance contracts, this would fit into the conditions section. It includes provisions on fraud, how to file a legal action against the insurer, subrogation, and the territory and termination. By the way, in terms of territory, you're covered if you drive into Canada or anywhere in the US, but not into Mexico. Important definitions. The covered auto, as I keep mentioning, is any vehicle shown in the declarations. Or a newly acquired auto. The ISO standard is that you have 14 days of coverage with a newly acquired auto. So even if you haven't sold your existing car, you have 14 days to obtain new coverage or notify your insurer. Also, a trailer owned by the named insured is covered. And any temporary substitute vehicle. I'd like you to take a look at my short article on car insurance pricing. The article is about why should drivers compare insurance companies. And particularly, I would like you to look at this section on 10 ways insurance rates commonly differ. And that's it. As always, let me know if you have any questions.